Hello, today is the 14th of September, Sunday. The week is about to end, so let's preview the next one and also finalize this current week, which is about to end soon. And today, actually, I wanted to start with something personal. I wanted to review my own performance in this year, and after that, we will discuss the current market and what I see in it. So, my own results during this year are roughly as follows right now. I basically trade two accounts. One of them is in crypto futures and another is in stocks. And in crypto futures, I am up roughly, I guess, with current fluctuations because I usually track it at the end of the day. It should be about 33, 32% right now. And in stocks, I'm flat. So the premise, not flat, I'm like down like 1.6% in my stocks account. So what actually happened in my journey is that during the second half of the previous year, I managed to create some substantial results in my experimental Bitcoin futures trading. And what I did is I was trading it quite actively. I will show you during which period. During this run, autumn of the previous year. And I've managed to 10x my test amount, even a bit more than 10x. Not a life-changing money, but noticeable and a good proof of concept of for crypto futures for me. If you, it's unlikely, but if you followed me before, you know that I am very critical of overnight gaps in stocks. And since Bitcoin futures trade 24/7, there are no overnight gaps here. And you will not wake up next morning and discover that the company was fraudulent or something happened. An important partner pulled from the partnership, like it happened, for example, in HIMS during this year. I will try to show you on the chart too. Now, what is it? Yeah, this particular moment was when provider of Ozempic, which is about to unravel, hopefully soon, pulled from their partnership, and I was long. And it was only 10% position, but it was nevertheless it was quite painful because this was 20. For me, it was a bit later. I hesitated a bit, and I closed it a bit later in the trading session. So it was like 24% loss for me. Recoverable, and I recovered that given my current flat position in stocks, flat results in stocks. But you will never find something like this in crypto futures because they just trade seamlessly. So, what happened afterwards, after that bull run at the end of the previous year, is I capitalized on it, and then I sort of um, left it alone, and I stopped trading Bitcoin futures because the market wasn't there. And I was focusing mainly on stocks, of course. And what happened next? I remembered about my crypto futures account again, a bit late actually, because I missed this situation, which was very tradable at the end of April 25. This is maybe the first lesson. I'll try to derive a few lessons from what I'm about to tell now. The first lesson was to concentrate your attention. Actually, this is obviously these lessons are specific to my own mind, organization of my mind, and my personal problem is that I am interested in too many things at the same time. This is a good thing because it helps you to helps you discover new stuff, sometimes really important and useful stuff, but sometimes it really leads you astray from what's important. So that was what happened here. But here, at the end of July, I was totally present and I managed to position myself well here. That means that at the beginning of July, I was able to deploy a substantial amount of capital. And it led this single trade, which I managed well, with only maybe one exception. When the breakout happened here at the 8th, or I'm sorry, at the 9th of July, it was okay. I managed to sell 2 portions of it into strength, and here on the 14th of July, I missed the extension from the moving average, from the 10-day moving average. And sometimes I look at 5-day moving average, and you can clearly see that here it was extended from it too. And judging by the volume here, you could also clearly indicate that it was stalling. So somebody was unloading its shares in this bullish momentum. So the momentum was sort of dampened. And I saw it, but I decided to postpone my decision. And when I sold the third module, I call them modules or batches, you can call them, in my position, it was a bit too late, and the price was way down. And I used, I don't remember exactly what was that moving average. I think it was 20-day EMA. As a trailing stop for the final module or batch, and it was triggered on 25th of July or something like that. I think it was 25th of July. So that trade alone managed to give me something like 42% gain in my crypto futures account. That only trade, which consisted of 4 compartments. And that was the right thing. So the first lesson, I will repeat the first lesson because I'm recording this video to help myself first and foremost, and to share my and secondary to share my insights with whoever is interested and whoever is going to whoever wishes to upgrade his trading. The next trade for me was here. And this could be very liberally assessed as what Mark Minervini calls low cheat in the consolidation, because it actually corrected very close to the previous breakout level and to previous all-time high, which was 111, 112, something like that, and I was in. But I chickened out at the 9th of August. I remember that day pretty well, and it was an ominous sign. Obviously, a bad close like this isn't good. But what was the day, by the way? Let me check, please. This is important. Yeah, it was Saturday. It was Saturday, which is not that important in terms of price. And my emotional state was compromised as well, which is very, very important too. So what happened is I left the position and I just closed it about zero or some minuscule profit, and it shut up the next day. So the mistake here was to basically close the position out of fear, out of greed, out of unwillingness to pay the money associated with a definitive signal that the position is not working out, and that led to missed opportunity, because even this movement could be traded for a good profit, for a profit well comparable with the results which were achieved during this moment here. And that's where problems began. So here, when it was very euphoric, I imagined that maybe we are going parabolic from here and Bitcoin is going to just shoot up, which is highly unlikely. It could happen, but this is the low probability situation, especially when you have this quite obvious double top here. So you can even see my markups. So I got in, got stretched a bit, left it. And that was the moment when I actually understood that since the breakout was failed and we are not likely to get further upside in Bitcoin and in other decentralized finance instruments, why wouldn't I trade a bit more short term? And I was watching this one. I actually wanted to short this sort of flag, and but did not, because I was still emotionally. I did not recover fully from this situation which developed here, and later I switched to trading Ethereum short term because it was more volatile, and also I became quite bearish. So each day I looked for short term trading opportunities within this consolidation based on the premise that Ethereum makes more percentage points each day, so basically a higher average true range, and there will be scalping opportunities. And I should say that it wasn't a total disaster, because I did my best. I had some wins, but on average, that led my profits through these how many of them, like in my table, in my trading how to say, trading blotter, it's like 2 months of short term trading in Ethereum. It made my percentage gain to go from roughly 42% to, I think, 35, 36. But it was so exhausting that my mental capital, which I started spending with this missed opportunity in Bitcoin, did not recover at all. Actually, it got worse, and that led to burnout. And that burnout and inability to focus well on what's actually happening has led to me missing this breakout in Ethereum, which is very my kind of situation, which I would be happy to trade and to take each time it appears on my radar. And not only it, other coin is was actually quite strong too. And I also think that my exhaustion, my mental exhaustion, led me to become a bit too bearish overall, maybe a bit faster than one should develop such inclinations. So the second lesson here is that by all means, if you have a proven track record, which I do have, with a certain setup and a certain time frame and a certain, overall situation, and it has its own rate of occurrence in the market. This is especially important for me. You got to be very careful of style drift. It is not the first time I've heard this warning, but obviously you got to live for it by yourself before you truly experience it, interiorize it, and it becomes a part of yourself. I can, this actually goes beyond that, because at the same time I was looking at stock index futures, and here in this domain we'll discuss stock indexes a bit more in detail later, but I should also mention that I was looking at gold, and here in gold there was a very tradable situation. I even had it marked down, like where the buy point should be. Actually, the buy point should be somewhere here. Maybe I wouldn't buy that gap, but I could totally buy. I could, but it's just unlikely. But I could totally buy what happened on the 22nd of August, this breakout. And look what happened next. So this was another price, this missed opportunity, which is a huge opportunity, was another cost of that mental exhaustion, and the mix of fear, greed, and style drift which ensued. So I actually realized that on Friday the 12th of September, and I was quite emotional. So what happened at that moment is I had a position in Ethereum, which I bought intraday, but I abandoned it. I'm just showing you the real price of this stuff. And it could be tradable. Obviously, a crucial part of a well-executed trade is money management. And if you are not buying it right, you aren't able to deploy proper amount of capital. And you just to say it easier, you aren't able to buy with a substantial amount of money, because in this kind of trades, which are about to span for a few days or a few weeks, you gotta sell something into strength, just like I did in this proper BTC trade. And all this is just playing around for the most. It's just you if you don't buy it right, you are not able to do this. And if you buy it off the hourly, it won't work like that. So that's why I basically chickened out. I was able to compose myself emotionally later during the day, and the only thing that was left on the table is XRP. Basically bought it as a sympathy play to Ethereum, and even here there were mistakes. So I'm very critical of myself today, but I think that it is important to be honest with yourself and to document these things as well. Even here there are mistakes in execution, and here, for example, the buy point is higher than it should be, and the actual buy point here is the top of this day, because you want confluence of things happening. So here we have now at least two confluence of two triggers. The first one is this downtrend line, which is so-so, and the second one is this previous day high. Or you could actually take a look from this perspective, and all of a sudden it's a mini consolidation pivot point. It's holding now, but it's a laggard. We will transition to the markets, and you will see that it is a lagging name, and it's quite likely actually to trigger stop here. But we'll see what's about to happen. Here I was able to sell something into strength. Not a proper amount of money once again, but it's a sympathy play first and foremost. So it would not be that painful if it stops me out. But the best thing, and the thing that which I bought with some, once again, not life-changing but substantial money, is the price of mental capital, which you should preserve. The price of greed and unwillingness to pay, not necessarily a full stop, but at least to pay something for the trade which is not working, which was that previous BTC situation. And the third thing is a style drift, which should be avoided at all costs. So this is the situation at the current moment. A priceless learning experience, actually, and a very important milestone. When I take a certain perspective, I'm actually quite optimistic, because I make these improvements by each year, and maybe we will discuss the whole timeline of my practice. So far, each year, each of the previous years is marked by an important breakthrough in my methodology. I'm sorry. And I'm very optimistic, despite the fact that I'm still exhausted emotionally, and it's not very pleasant to see this weakness in this trade. But right now, I'm honest, like with my nature, and congruent with my own style, which I'm developing. So that's why it makes it easier to witness this situation. Okay, that was a long discussion. There is still powder in the coffers, and with that being said, let's and profits to lean on in my trading, and the year is not ended yet, so we'll see what's about to happen. And with that being said, let's transition to the markets. Actually, as always, let's start with a brief look at macro and the previous week. So yeah, inflation, in my opinion, some say in the States, especially, say that inflation is very, very tame and not a problem. For me personally, it's mixed, because we saw another inflation release, and we see that month on month it's a bit higher than expected. No drastic surprises on the better side of it, so it's still there. But it actually matters less since we got an official statement from the Federal Reserve that they are not that concerned with inflation now, and they will be targeting employment as their primary metric. And that will result during the next week, and the most important release will be on Wednesday when they will announce their rate decision, and we'll have a press conference. One important thing that should be pointed out right away is that market usually needs at least 2 more days, basically till the end of the week, to figure out what's about to happen. Because sometimes the initial reaction is good and it gets bad, and vice versa. So a very, very important milestone. And what we have now before these, I should say, maybe critical Fed rate decision, because it will 100%, in my opinion, it will signal a change in policy. And the only thing we should be watchful for is market reaction to it, because as I mentioned before, I'm quite bearish, actually. Maybe I was a bit too bearish due to my emotional exhaustion, but there are lots of warning signs in this market, in my opinion. And there are some good signs as well, but I'll try to name both of them. And the first one is also obviously about the decentralized finance, and my primary concern is the so-called treasury companies, and of them the most prominent is BMNR, which is one of the hot names now. The company, this type of company is well known because of the MicroStrategy ticker MSTR, and now it's just strategy, but you know the guy. And the strategy is quite simple. Raise some money, buy something in the world of decentralized finance. In this case, it's Bitcoin. Now it's something wrong. BMNR. Yes, Bitcoin version. Right. And you basically hold it. You hold it, and you shouldn't be a genius to assume that you also do something with it. You like land it, or like other, mostly landing for for sort of banking in the age of convergence of the decentralized finance and the so-called traditional finance. And while MicroStrategy or strategy is suspiciously decoupled from the price of the asset which they are hoarding, Bitcoin, their leverage shouldn't be that high. And by saying that, I automatically disclose my concern. The concern is that some events, it could be a recession, the next pandemic, or hot conflict, or another kind of political or military conflict, could bring the market down for some prolonged period of time. And that means liquidations. That means that guys who are rushing to buy everything decentralized, from useful networks like useful network tokens like Ethereum, and good source of value such as Bitcoin to some other assets which are quite questionable in their usability. All these guys will be loaded with that stuff, and this stuff will spread across the economy, and lots of people and organizations which make mistakes too will buy this kind of treasury, quote unquote, I'm sorry, stocks. There will be also derivatives on them, and so forth. And when something happens and the markets go down, as I said, these guys get liquidated, and this can get liquidated and will be liquidated. This could be coupled with some additional pressure from institutional adoption, which was widely cheered during the previous years, thanks to the likes of IBIT or ETHA ETFs, and there are also leveraged ETFs. So these stocks, I don't BMNR is like the primary example of them, but there are others as well, and their stocks are jumping hundreds of percents just by naming themselves treasury companies. And this reminds me quite well of the special purpose acquisition vehicles, SPAC, abbreviation, which was quite prominent not so long ago, a few years ago. And where are these SPACs now? Mostly gone. And this sounds very toppy and also euphoric. And this is where my skepticism and my unwillingness to buy certain situations which could be bought actually here stems. Let's take a look at MNQ. This is a breakout. Nasdaq is making new highs as we speak. And all the other main indices are strong as well. S&P 500 is making new highs. Russell was a bit weak on Friday, but nothing too bad here. It could recover, no problem. So euphoria is bad, and these treasury companies are, in my opinion, are ticking bombs. While MicroStrategy or strategy is not that leveraged, these new guys will be leveraged as hell, I promise you. And they will go down quite spectacularly when time comes. The only thing which is not present right now is a catalyst. And my cautiousness, not bearishness, right? Because I sort of debunked my bearishness with an honest assessment of my psychological state. But cautiousness is quite valid in my opinion, because there are some catalysts which could come in during the next week as well. If Federal Reserve, maybe during the rate cut, which could be firstly baked in already into the price, and most importantly, with actual rhetorics during the press conference, they could scare the market, and that could trigger the sell-off. The next catalyst could be recession, and I don't know, markets don't have a very well working long-term memory, and that's okay. Most people don't. But actually, in the history of markets, lots of time when Fed starts cutting, that is they basically admit that the economy is not that strong. So that's why they need to cut, and that's why they need to support the economy with cheaper money. So in that case, the market prices in recession first, and then it starts to price in the next cycle of growth with the next theme and cheaper money. And the first cut could very well coincide with the bear market or correction, which could be a result of the current macroeconomic situation. And with that, we should also touch tariff developments. While it is mostly settled with European partners of the state, China and India tensions seem to be on the rise actually, and we see reduction in talks. We see additional tariffs which are being rolled out now, and that could present itself. Each one of these things, Fedspeak, recession, or tariff situation escalation, could present itself during the next week, or it could be a cascade of these events. So that's why I'm very cautious, and I'm willing to buy that breakout, which is absolutely viable breakout in MNQ, or NQ, depending on your size. So yeah. With that being said, let's take a look at the counter arguments here, and there are examples of these counter arguments as well. The best of them is Tesla, and in my opinion, because this is the well-rounded play which is in the market now. And I missed this one too because of my obsession with short-term trading, but I'll be looking into it maybe on a pullback, and it just looks so good on the daily. On the weekly, the good volume is missing, but you sort of see that there is no push beyond this previous high, which were reached at the end of May here. And it's quite extended, but just look at this. It's just pure power. And it's a risk trade. So it's tech. It's AI trade, which proves the point that AI that the states remain the primary innovation hub in the world. It's also positive perception or expectation of Fed policy here, and it is also very important because it is not small. There were names which were breaking out during the previous week, but you could write it off and just say, yeah, it's just traders playing euphoric guys, running stocks up in anticipation of the Federal Reserve announcement. But all these guys, they're not enough to do this. So this is a huge vote of confidence from smart money here, and this is a very important indicator, and it sort of offsets these signs of euphoria which are around right now. And with that being said, I think we should touch on the situations which I will be watching during the next week. Despite my eagerness to deploy capital now, I will continue to be cautious, mostly because Fedspeak is very important, and it could change the current situation very drastically. So me personally, because I have missed quite a bit during this year, despite the fact that I'm still 30 something up in my crypto futures account, I don't want to take a hit in my stocks account, which is flat now, so I gotta be cautious. But if you have a cushion, you could be maybe a bit more aggressive here, because there are names which are setting up. A good example which could which sort of plays with that narrative of good old American tech being still relevant in the world of today is Shopify, and it's totally viable. Nice pivot could be derived here. Very manageable risk, tight consolidation after very good earnings. So this is the situations I will be looking at during the next week. WeRide is an interesting name here, also good. Good consolidation, but I'm a bit more cautious because of these days here. This is a bit too much. Another sign of this is a good example of the names which could be supposedly run up by traders, but once again, look at this volume. And this weekly volume is substantial too. This is not only a play for active traders. Institutions are involved as well. There. What else? What else? Lemonade doesn't look that bad. Also, huge accumulation on earnings, and it could be volatile here, obviously, but not the best situation. But I will be looking at it too. You'd be surprised. Luckin Coffee is still around, but yeah, notice that one. A more important name is ARKK, which looks really nice to me here, and it is almost 100% guarantee from a person that it will break out. The question is, what will happen next? Will it be a failed breakout, and will it morph into a failed the so-called SFP pattern and a correction? But it's just look at this. It's very good, very powerful, and obviously Tesla plays a role here, but it's diluted here between the capital is diluted between Tesla and other names here. That's a given due to the fund nature of this stock. I also like CRWV here. Volatile name, and this week was not too good, but this could be a change of character. Actually, this is the largest daily volume since the IPO, so you should be paying attention. I will, that's for sure. AI play. PLTR a bit late to the party here, already on the move, but still interesting. Construction partners, that's a reshoring play. What else? Cheryl Wolf. Yeah, so there are some situations in stocks. For on the liquid side, I should point out ARKK here and Shopify as a priority names, which I will be looking during the next week. Obviously, this AI boom needs power, so Power Solutions International, PSIX, is good too, but once again, concerned about this day here. Still a cheat situation, and it could go up, and it could consolidate and break out from there. Should the market be supportive here? Other names outside of stock market, I have these ones marked here, and these are currency futures, and this one is GBP, British pound, and this one is euro. And this setup here, euro is actually on the move here too. So a bit late to the party as well, but not as late as Tesla, of course. This price picture, this strength, this consolidation is very supportive of how do you say it? Of a very systematic rate cutting ahead. So the capital could be preparing to look for safe havens, and that could speed up that global repositioning of capital between the States and Europe as the markets of the Western world competing for capital allocations during this historic cycle. So with that being said, I should wrap it up. A very interesting year, lots of good lessons, very productive lessons, and some money as well earned, and quite an uncertain situation in the week ahead. So I should phrase it like this, put it into words like this. I'll be trusting the market, and if things work, I'll be there. But I also will be very cautious because it could be it's quite fragile in my opinion right now. So yeah, I think that's it for today. Let's be in touch.